Hi, Shiva. Girish. Hi, Girija. I think you're on mute.
Oh, sorry, my bad. I was on mute only. Okay, so as I was,
Yeah, that's what I was thinking you're talking. Okay.
yeah, I was actually talking in mute only. My bad. So as I was saying, in 15 we multiply 280 and divide 200, and that comes to 21. We deduct the 21 from 30, that comes to 9. That is our capital gain that we have earned. On that we'll pay tax. On the other side, if we talk about the business profession, our sell value is very clearly given as 34 lakhs here. So 34. We deduct the cost. Cost is what? Again, that concept comes in. It is as if we have sold the asset to ourselves. So because our sell consideration we have taken as 30, our cost will also be 30. Now 34 minus 30 comes to 4 lakhs of business profession income. Any questions, please?
There won't be any indexation because it's a short-term capital gain. So I'm not able to see that.
So indexation I did know. 15 multiplied by 280 divided by
no
200.
for the business profession.
In the business profession, is there a indexation concept?
I'm asking.
It is not there. It is not there. It is not there.
Okay. It's only for capital gain, right?
We have actually finished the business profession, if you remember, till last today's only discussion we finished. There was no concept of indexation.
Yeah.
Indexation we started discussing out in the capital gain. So when doing the business profession, do not do the indexation. So that is not done in there.
Okay.
Yeah. So the reason is very simple. I mean, in business, if you are purchasing a product and selling the same product going forward, it is your business. You're not going to be allowed the inflation part as an expense.
Okay.
Capital gain is a whole different story. Yeah. Now let me bring in one more concept. Then we will finish one more question and we'll wind up for today. All right. And most of the provisions are already done with this. There are just more questions which we can practice. Please do when you get time. And one thing only remaining is the exemptions. I'll just it's just a 10-15 minutes discussion. So next time I'll be joining. I'll discuss that and finish it off, and then we'll move forward to income from other sources. Income from other sources is even not that big. The major part is the clubbing of income and other parts. So I will maybe in next two discussions, the whole thing would be over. Yeah, let's see. If we get time, we can revise also after that. Okay, the next one that I wanted to talk about is, if you remember when we were in business and profession and we were talking about depreciation of asset, I had introduced this concept of, if you have sold the asset, that is actually capital gain and not a profit and gains from business and profession. Do you remember? Yes.
Yes, we remember. That was for the capital assets.
Yes, that is absolutely right. Yeah. Now I'm giving you another information. Whenever you are selling a depreciable asset, and there is a profit on it, it is always short term. It is never long term. Now, you don't have to think about the 36 months, 20, 12 months or anything like that. You anywhere that is a depreciable asset, that is always a short-term capital asset. Short-term capital gain only arises from that. Make sense? Yeah. Having that in mind, let's read this. Sorry. Okay. All right. So having that in mind, let's read out this question. K Industries, a non-manufacturing concern, has 8 machines eligible for depreciation at 15%. So there are 8 machines eligible for depreciation at 15%. So again, let's remind us about the profits based on business or profession provisions, where we had the depreciation. There were different rates. Building was 10%, furniture was 10%. Then we had in plant and machinery, we had 3 categories. One was other category, which was 15%. Computer was 40%. Books was 40%. Now, it is that plant and machinery which is 15%. The written down value as on 1/4/2020 is 9 lakhs. The WDV on the beginning of the year is given. If you remember, again, let me remind you, when we were in the business and profession, we were trying to calculate the depreciation. The formula was you take the opening WDV, you add the purchases, you deduct the sales, final value is your closing WDV. On that closing WDV, you multiply the rates and you calculate the depreciation. That's why the opening WDV written down value is given here, 9 lakhs. During December 2020, a new machinery was purchased for 4 lakhs. Again, as I said, purchase is given 4 lakhs. But here, one thing to focus on is, this is December 2020. Is this after 3rd October or before 3rd October?
After.
Does that mean full depreciation or half depreciation? Perfect. Compute the depreciation or capital gain for assessment year 21-22 if 2 of the old machines are sold for, there are 2 questions here. A is for 10 lakhs, B is for 16 lakhs. Then expenses incurred for such transfer is 20 lakhs. Now let's talk about the 10 lakhs first. Okay. Before we move to the 10 lakhs.
Right?
Sorry, come again.
20,000, right? The transfer is 20,000.
Oh yeah, 20,000. My bad. Yes, 20,000. So let's calculate the WDV first, closing WDV. Opening was 9 lakhs. You add purchase of 4 lakhs, that comes to 13 lakhs. There is no other information, right? Now, yeah. So, our 13 lakhs becomes our, so no, 13 lakhs is the after addition. Then we deduct the cells, right? We deduct the cells. Now, cells is how much? In our case, 10 lakhs minus 20,000, that is our 9,80,000, right? Yes.
Oh, okay. Okay.
Expenses has to be deducted. Yes. So 10 lakhs minus 20,000, that is 9,80,000. So our finally our closing WDV becomes 3,20,000. Yes, 3,20,000. So please calculate the depreciation on this. While calculating, please note that it is given old machines are sold. That means whatever is left with you is the new machine. Whatever balance that you have is the new machine. Make sense?
So only one machine was bought, right?
Yeah.
Extra, okay. Okay, so the old machines, 8 of them, 9 lakhs, okay.
So as we have discussed 15%, and we have discussed half of the depreciation, that means 7.5%, right? So because it is plant and machinery and it is a purchase during the year, that means additional depreciation also comes into picture. That is the logic here. Yes? Yeah. So additional depreciation will also be half, that is 10%. So your 7.5% regular depreciation, 10% is the additional depreciation. The total comes to 17.5%. 17.5% of 3,20,000 comes to 56,000. Make sense?
Yeah.
Yeah. Now this is the solution for part A. So there is no capital gain coming in here. Why there is no capital gain? Can somebody tell?
You have not calculated the sale yet.
No, we have calculated the sale. We have taken into consideration.
But we have not included. But we are only calculating the depreciation value right now. Right?
But why not? Why not capital gain? Because in the question they're saying compute depreciation / capital gain. If the capital gain is there, you have to calculate also.
Yeah, that we'll have to do it, but then we'll have to take that from the depreciated value, right? 10 lakhs and depreciated value. Then will the capital gain come?
Now, the answer to my question rather is the block of assets. If you remember, if the block of assets, the value is still there, it is not a cell. The individual assets lose its value. Here we see the block as a whole. So when we have sold some asset, we are still left with some leftover assets, and there is a value.
Yes.
It is as if nothing is sold. That's
Oh, I
why
see.
in the first case, there is no capital gain. In the ITR also, no capital gain will be there for this person if the asset is sold for 10 lakhs. Even if he has sold for 10 lakhs, there is no capital gain. Only the thing is happening is his depreciation is reducing a little bit. That's all that is happening. Okay. Any questions on that?
So there is no relevance to that 2-volt machine and other things, right? You just ignore it. That we just need to just
completely ignore it. Completely ignore it.
ignore it.
Completely
Okay.
ignore it.
Okay.
Now, exactly opposite situation we're going to see now. You'll understand what I'm saying now. Okay, let's look at the 16 lakh side. When the sale has happened for 16 lakhs. Now look at this. Okay, there were 8 machines. You purchased one. You have sold only 2 machines. You're still left with 7 machines with your hand. Okay, but you have sold for 16 lakhs. Now let's look at the calculation once more. For B part, 9 lakhs was our opening WDB, 4 lakhs was purchased. So total of it was 13 lakhs. You sold for 16 lakhs and your expenses was 20 lakhs. So
20,
what becomes is
20,000
minus 20,000 is our cell consideration. Our cell consideration is more than the value of the block of asset. Here is a case where when I told no, when our cell consideration, even for few machines, is more than the block of assets, in that case, we will consider it as a cell of the whole block only. Here comes the provision of capital gain. Here, no depreciation now, because asset is not existing. And we are saying block is not existing only. So why depreciation? No question of depreciation. Rather, we will calculate the capital gain.
So even the additional this and all that will not come, right?
Nothing will come.
No,
nothing will come. Because the block is not existing only. So whole concept lies around the block of assets only. If the block of assets is not there, so there is no question of depreciation. There is no question of additional depreciation. Now here, what is our cell consideration now? 15 lakhs 80. What is the cost of asset? 13 lakhs. Simply deduct these values.
2 lakh 80.
2 lakh 80 is our capital gain. Make sense?
Yeah.
So let me reiterate the fact that I'm just solving by writing the numbers, but do follow the presentation of the whole question right nicely. Whatever comes to your mind, just present it in that way. That would be appropriate, I'm pretty sure. I think that this is most of the capital gains. 10%, 15% is about the exemptions. Those are available. When you are selling a residential property and you are purchasing another one, there is a specific provision that allows you to take the benefit of it so that you don't have to pay any capital gain on it. So we will discuss few of those. There are actually a lot of those provisions, very few, which are important in my opinion. We'll consider those only and we'll discuss, and we'll move forward in the next time when we are meeting. Before I wind up, any questions up until now, please? Okay, fine then. That's all for today. Thank you, guys.
Thanks a lot.
Thanks a lot for your time.
Dheeraj, we will need time to refresh the salary and all that once.
I know, I had that in mind. Let me just quickly finish these and then we may connect.
What is remaining now after this? Capital gains is done.
So we are done with all the heads other than other sources only. Only one head is remaining, and that is a very small, 5-10 minutes maximum. After that, we are left with what do you call it? That thing. Some other things are there. For example, set off and carry forward, clubbing of income, deductions under section 6A. So those 80C section, 80D section, if you remember, right? So that 150 part. So those things are there. So after that, once you finish those, I feel like those hardly will take one discussion. That's all. Like 45 minutes or 1 hour should be enough for all these together. So after that, we'll revise the salary and house property quickly.
Yeah, because
and in the meantime, if you can practice few questions while looking at the questions that
Sure.
sir has given, then that will be also amazing. That would help me in revision also, because in revision what happens is if I keep on telling, then I'll tell. It is a benefit for me because I'm remembering it while telling you only. But if you tell me when I'm asking it, that would be actually beneficial for you also.
Sure.
That's
Sure. So today and tomorrow is the same. That only we are going to do.
yeah, perfect. Yeah,
Okay.
fine then. We'll wind up.
Yeah. Thank you.
Yeah. Thanks,
Thank you.
Dheeraj. Thank you very much.
Thank you, Dheeraj.
Thank you, guys.
Thanks, Dheeraj. Thanks.
Thank you. Good night.